So guys, last week I made a video about how to make money using the expiry day strategy. But I felt that I was not able to justify the topic at hand. See, any strategy, whenever you would use the word strategy, it's not just about a technical setup. It's not like, okay, when this particular breakout is happening, you should do this. A strategy is a combination of multiple things. You need to think about the entry, you need to think about the exit, you need to think about the probability, you need to think about risk management and trading psychology, and there are many other aspects that you have to keep in mind. So even though the video that I made last week, you guys liked it, many of you had some very insightful comments and questions, I felt like a follow-up video was in order because there were some things I was not able to explain clearly in the last video. So this particular video is my attempt to clarify all those doubts and to answer some of the questions which you guys asked in the comments section. And by the way, if you have not watched that video, I will highly recommend you to watch that first, because without that you will not be able to understand this video, right? So the link will be given in the description below, so check that one out and then you come to this video so that you can understand what is really going on. Okay, so the first thing that I wanted to say was that the intent behind making that previous video was to share more of an idea rather than the strategy, right? So a lot of you who are beginners in the world of options and you are struggling to find an edge in the market, the video was aimed for you guys, for those guys who are starting out, who are struggling with some ideas, to start with something simple but something very effective. So don't think of that as more of a strategy, think of it more like an idea. That's the number one thing that I want to put it out there. So strategy is a very heavy word. I don't want to use the word strategy too much, but that's the one word which is used so frequently, so I had to use it so that at least you guys can understand what I'm going to talk about. But in reality, I believe that strategy has many more dimensions which are not possible to cover in these videos. The other thing which bothered me a little bit from the last video was that the way I demonstrated that strategy was a little atypical of the way I do it. So what you guys are seeing right now, this is how I trade. Right, so even though I demonstrated the strategy using that one trade which I took, so that at least I can explain you the concept behind the strategy, the idea behind the strategy, in reality, that is not how I trade. Right, this is how a typical Thursday or a typical expiry day works for me. So that is another reason why I'm making that video, so that at least I can give you a practical sense of, okay, if you understood that idea, this is how that idea can be implemented from a real life perspective. So let me first of all explain what happened today, and then I will get down to the questions that some of you guys asked. So let's first of all start with the daily charts of Nifty, because anything that you want to do in the market, you need to first understand what the market is doing, right? So the market has been bullish, of course, of late, but what has also happened in this market is that there is a lot of violence, there is a lot of struggle that is going on between the bulls and the bears. So we saw how the market went up, then came down, then it again went back up, again came down, again went back up, and today there was a gap down. Right, so this market is very bullish in terms of its sentiment, but it is not as strong in the trend as it was, let's say, a couple of months back. So for all practical intents and purposes, this market is a range bound market with a lower boundary of somewhere around 14,500 and on the upper side maybe somewhere around 15,300. So that is the broader context in which we are operating. Now coming to today, so we had a very bearish global market. So we saw that the Hang Seng, the Nikkei, the Kospi, right, everything was down in the red, and the US market had closed in the red the previous day. So the market essentially today, when we woke up and we saw the market opening, the market basically opened with a big gap down. So now the question becomes for an option seller that if you have to implement this strategy, what are you going to do? Right. So there was a huge gap up, and then even after the first tick, when the market started to move up, one more wave of sell off. And then from that level, the market rallied, and towards the end of the day, there was some more profit booking. So you can see it's a very volatile market. And even the range in this particular market is very wide, right? So you can see that like making a 100-point move in this kind of market is so easy. So from here to here, it is 125 points. So this is the kind of market that we are dealing with. So my job today as a trader was that if I have to deploy the expiry day strategies, I needed to figure out those levels which will eventually not be broken by the market. And hence when I sell those options, they will eventually go back to zero. So if I go back to my screen here, In fact, let me make it a full screen so that it's easier to see. So there you go. So you can see here that take a look at the options, right? All these options, they are all worthless. 0.05 rupees, right? All of them except for this one guy, which is about $4. Everything else basically went down to zero. So in the beginning of the day and throughout the day, I basically kept selling options. Now I sold both put options, PE means put options, and I also sold call options. So these are CE means call options. So call options, the idea is that I sold all these levels, 35,000, 35,100, 35,200, 300, 400, 500, right? 600. So, and then on the upper side, these were the levels. And that is the job of a trader, to identify the levels that market is most likely going to respect, right? And if you take a look at the orders, my orders were huge. So I basically sold throughout the day. I just kept selling. It's hard for me to explain all of that in this particular video, but the idea basically was that Nifty, Bank Nifty, in my based on my analysis, was going to be in a certain range, and I was selling those options that were going to be outside that range. So you can take a look at all these levels. So this level, this level, this level, this level, this level, this level, all these options basically became 0, 0, 0, 0, 0, and 0. Right. So that is the one thing which I wanted to clarify, that in the last video, you guys saw me taking one trade and then I sat on the trade throughout the day and basically ate the premium. But that is not my style, the usual style. My usual style is to basically be a little bit more active and keep responding to the market and keep adjusting my positions as the market keeps telling me new information. Now, having said all that, let me answer a couple of questions that you guys asked. The number one question that was asked was about my risk reward, right? So this is a very interesting question. So a lot of you guys asked that, okay, if you are selling an option of, let's say 100 rupees and you have a stop loss at 250 rupees, what is the risk reward, right? Because as an option seller, my maximum profit is going to be 100, whereas my risk is going to be 150. So that question is a very valid question, very smart question, I would say. What is the point of taking a trade where my reward is 100 points, whereas my risk is 150 points? So the risk reward doesn't make any sense. Now, as I said, it's a good question, but what you are forgetting in this equation is that trading is not just about risk reward. Trading is also about probabilities. So let me give you guys a practical example. So think about a casino. So when you go to a casino and when you play on a slot machine where you are, let's say, entering about 100 rupees, 200 rupees, 300 rupees, you stand to gain a jackpot, right? So jackpot can be of 1 lakh rupees or 5 lakh rupees or 10 lakh rupees. Whereas what you are giving to the casino is basically 200, 500 or 1000 rupees. So what do you think is the case? Why is casino giving you the opportunity to make much more money than they will earn from you? Think about it for a second, because if that is the case, if risk reward is the only thing that we have to keep in mind, then casinos should be out of business. Would you guys agree or not? Right? So if you think about it a little bit more, you will understand the logic behind it, because casinos, they are not playing the game of risk reward. They are playing the game of probabilities. So you are not the only person who comes to the casino. There are thousands of people who come to the casino, and the probability of them getting that 1000 rupees, 2000 rupees, 5000 rupees from those people is very high, so that they can justify that one out of, let's say, 100 people or 1000 people who hit the jackpot, even if they pay off, they will still be fine. So in the same way, when you are an option seller, the risk reward is not going to be in your favor. However, the probability is going to be very high that you will make money, right? So as you can see here, so all these options that I sold, they eventually went down to zero, right? So how did I know that they will go down to zero, right? So did I know that all these options will go down to zero? No, I did not know. But what I did know was that the probability was very high that these options will expire worthless, because this is a reality that 70% of the options that are written, they expire worthless, right? So whatever I did here by selling these options and then eating all this premium, all this money, and whatever the 65,000 rupees is, that is not my own idea. That is the basic, that is the foundation of how the options work. So what we are doing is not magic here. What we are doing is basically common sense. It is rooted in facts. So I hope that answers the question about the risk reward, why I was willing to take a higher risk and with a lower reward, because of the probability of the trade working out was very high. Now the next question a lot of people asked was that instead of selling options, why don't you buy options, right? And that's again a valid question. I do buy options, but that is not the strategy that I wanted to discuss, right? For buying options, the way you have to look at the market context has to be different. You need to keep in mind the volatility, you need to keep in mind the momentum, you need to keep in mind how far you are from the expiry. So there are different dynamics that you have to keep in mind when you are buying options. This particular strategy was focused on option selling, so that's why I did not talk about option buying. So if you want to buy option, if you are an option buyer, there is nothing against it. In fact, I myself buy options several times during a week. But on Thursdays when there is an expiry, I prefer to do expiry day trading rather than buying options. Now the last question that I wanted to answer was regarding the stop loss, right? So a lot of you guys asked about stop losses. They are not very effective when selling options, and that is true. But the way I took that trade, a unidirectional trade in that last video, I went with the stop loss. But today, as you can see, there is no stop loss because I was selling both call options and put options. There was no need for me to have a stop loss. So managing a risk can be done in several ways. It can be done through a stop loss. But in Bank Nifty, especially, a lot of you guys know that Bank Nifty is a very volatile index. So stop losses, they get hit all the time. A better way to manage the risk is to go to the opposite side and sell, let's say, a call option to hedge yourself. But that requires a higher margin. So that is something that you have to keep in mind. But that's again a very valid point, that stop losses may not be the best way to manage your risk. And I completely agree that that is true. So anyway, guys, this is my attempt to answer some of the questions that you guys asked in the last video and to give you a more realistic perspective of how I trade on the expiry days, because what you saw in the last video was not typically how I trade. So I hope something made more sense. And if you combine that video and this video, probably it will give you a better understanding of what I wanted to convey. And by the way, at the end of the day, guys, this is all an idea, right? Let's not call it as a strategy. It's basically an idea. If you already know about this, I'm sure you are making money out of it. But if you don't know about it, at least you learned something new, right? So there is no harm in learning something new. So that is basically what my intent is all the time for any of the videos, that at least if I can share with you guys from a realistic perspective, a practical perspective of what we are doing, not just theory, right? A lot of people are talking about theory, but theory, it doesn't make money. You need the practical aspects to see how that theory can be applied in real life. So that is always my intent. So I hope at least you guys learned something from this, and probably you will use some of this learning in your day-to-day trading.